Welcome to Barchart's series of educational webinars designed to enlighten you about a variety of trading strategies and concepts, inform you of the pages and tools Barchart provides related to these concepts, and offer you some trader's insight to help you make a more informed investment decision. Today's session, Mastering Options Flow Analysis. Now, last month, I got the opportunity of introducing Barchart's newest premier screener page, and that is the Options Flow Screener. Now, this unique screener highlights options trades, their strikes, their directional sentiment, if the trade position is possibly being opened, and potential future price movement. Now, in this webinar, which we did about a month ago, I gave you a broad brush of the elements and filters that were contained inside this screener. Today, we're going to examine a deeper understanding of the filters, their capabilities, their applications, and the collective actions that may lead to actionable opportunities. Hello, everyone. My name is John Rowland, Barchart's head of trading education. And as I mentioned today, I'm going to show you how to test drive our new screener and offer you some ideas about how to apply and adjust the filters to give you a greater sense of market sentiment, but also how our focus to more of a granular level to look for potential price movements and opportunities. Now, before we get to all that, please welcome our moderator and Barchart's project director, Jean Baker. Hello, Jean.
Hi, John. Good
How you doing?
afternoon.
Good afternoon to you.
Yeah, well, I guess second day of spring. Usually isn't March 20th first day of spring?
I think it's the 20th. You're right. Yeah.
Yeah, well,
What?
I heard yesterday, they were saying yesterday was the first day of spring. I don't know, maybe it would have something to do with leap year, but anyway, good afternoon.
Well, I'm all for having spring coming earlier if it was because it was a leap year, right?
Yeah, yeah. Well, you have a lot of info to cover today, so I'm going to get out of your way and I'll be able to either answer questions or pass them on to John as if you want to send questions our way. So go ahead, John. It's all yours.
Thanks, Gene. All right. Just a reminder that today's session is for educational purposes only, and decisions to buy, sell, or trade securities, commodities, or any other investment involves risk and best made on the advice of a qualified financial professional. I will remind you that options trading is not for everyone, and options trading may result in a loss of principal. And understand that under no circumstance shall we be liable for any loss or damages that you or anyone else incurs as a result of any trading or investment activity that you or anyone else engages in based on the information that you receive through barchart.com and our services. Okay, so again, today is part 2 of how Options Flow Screener works. Our part 1 is this webinar, and this can be found under our archive, under the Learn button, under the archive webinars. And if you're new to this concept, or even if you're familiar with options flows, I would suggest that you review this session because we're going to build upon the information that was presented in this first webinar, and we're going to make some assumptions that you have some basic understandings of options terms and their concepts. Now, you don't need to watch this to follow today's ideas and methodologies, but I will say it will certainly will help. Okay, so let's go back to the options flow page. And in case you're not familiar where to find it, it's under options, and under the options market pulse, you will find options flow. And the page itself is sorted or defaulted by premium. Now, the premium is basically just the price of the option times the number of shares of the options times the underlying share. So in other words, if I have an option that is priced at $1 and the volume is 100 options, each option represents 100 shares, so that premium would be worth $100,000. Now, in theory, this helps identify large trades or clusters of trades where traders are committing capital. Now, our job is through trade forensics is to try to discover if it's just this normal activity of institutional traders, for example, hedging or risk management, or could it become a potential actionable trade? So one of the ways that we're going to do this is we're going to look at volume and open interest. Now, the assumption here is that large volume compared to low open interest is an excellent determinant of whether a trade is being opened. And that is what we kind of want to start looking for. Now, large volume compared to large open interest could indicate that a trade is being closed and would require further investigation. And finally, small volume compared to large open interest makes it difficult to determine if a trade is being open or closed. And so in all three cases, the only way we can confirm this is we'd have to wait until the next day's open interest result to see if the open interest rose or fell. Now, not all opening positions are actionable trades, but understanding the mechanics of options trading might lead us to understanding of market sentiment or general market conditions or how traders view an individual equity or the overall general market. So that takes us to market sentiment or trade sentiment. Now, this can enlighten us of the intent from the dynamics of the initiation of a trade. Now, all things being equal, remember that all trades need both a buyer and seller. But if a buyer is willing to lift an offer, take the ask, then this can be inferred as an aggressive action. So a trade sentiment that is bullish, for instance, if someone buys a call on the ask or the offer or sells a put on the bid, that would be perceived as a bullish sentiment. And all things being equal, that trade would result in a profit or increase in value if the stock went higher. Now, actually, in the put scenario here, the put would actually decrease in value, but you would make a profit. So bearish, if a call trades on the bid or the put trades on the ask, then this would be result of a bearish sentiment flag. And that, again, all things being equal, that trade would increase in value on a stock price that moves lower. Now, the caveat here is that single leg trades can easily be categorized as bullish or bearish based on this concept of lifting offers or hitting bids. But however, when we're dealing with multi-leg trades, it's important for us to look at each leg in proper context. And so that a bullish sentiment leg could be part of a bearish trade. So with these two concepts, opening trades and sentiment, let's go back to our screener. Now, the first thing that I do when I use the screener is I just want to get a kind of general feeling or consensus of options flow for equities and ETFs. So the first thing I'll do is I'll come in here under trade sentiment, and what I'm going to do is first I'm just going to look at bullish sentiment. And again, when we look at bullish sentiment, notice that under the trade you'll see green. That's an indication. That's one of the ways that we can sort this. It says that a green trade is a bullish sentiment. But you can see, for instance, here is a call that traded on the ask. So that gives us that bullish sentiment. So what I kind of want to do here is I just want to look at the size of the trades, the flow of the trades, and just kind of get a sense of, the size of the deals and how many deals, and is there a lot of bullish sentiment based on, our screener. And then what I might do is I'll come back and reverse the process. I will just look at, well, let me first, before we move away, we can see that, we've got about 10 deals that are around, in terms of bullish sentiment, 10 deals are around, $1 million or more. So then I might go to, let's say, bearish sentiment. Again, I'm just kind of looking at a general sense. And again, I might look for a large deal or a number of deals. And you can see that kind of today we're kind of equal weighted. And that makes sense because we're coming into the Fed speak this afternoon. But what I'm trying to do here is I want to see if there's this imbalance, right? If there's more flow into bearish trades or more flow into bullish trades. Now, what could happen is, for instance, let's say if I'm doing ETFs, right? I'm looking at some indexes. Let me get rid of this. Hang on. Right? Again, we're looking at which of the ETFs we're seeing more bullish sentiment or bearish sentiment. Again, the Qs and the SPYs, financials, right? Versus, bearish. Again, am I seeing risk on or risk off? Here we're seeing more bearish in a more of a risk off. IWM, gold, right? So that kind of gives me a general sense of what I think the market is going to do. Now, what I can do is, in this big picture analysis, if I have a thrust day, now what does that mean? Well, let's say we have a big up day or a big down day today, and I do see this imbalance between a bullish flow or a bearish flow. Well, that will create what is called a supply or demand zone. In other words, a level of support or resistance. And I know that when price returns to this level, this particular range of price for this particular day, either be it in the ETFs or in an individual stock, that will act as a level of support or resistance based on the sentiment, the greater sentiment of the market. A bullish sentiment would create a level of demand or a support zone, and a bearish sentiment would create a level of resistance. And again, this is a way of kind of just a big picture analysis. But then what I'm going to do here is I'm going to start looking for some additional information. Not only am I going to look at the premium size, right? And now premium is relative, right? Again, we want to look for large trades. But if I'm looking at, for instance, like a stock like NVIDIA, right, and we're talking about a $440 strike that is, what is that? $440 in the money, a deep in the money call, and somebody's buying 2,000 shares. Well, this is really somebody who's trying to leverage options. Yeah, this $91 million trade is a large trade, but in the relative of what NVIDIA is worth and how deep in the money this is, it's probably not that unusual. So I'm going to look at those different trades. The other thing I'm going to kind of eyeball here is, what sectors are actually trading, what stocks are trading. And again, that could give me a sense of a flow of money in and out of the market. The next thing I'm going to look for is outliers. In other words, I'm going to look at those stocks that are not what I would consider ones that are typically in the options arena. Now, what do I mean by that? Well, if I go to my most active stock options page, you can see like the regular characters show up: Tesla, NVIDIA, AMD, Apple, so on, so on, so on, so on. So what I'm going to kind of look for is when I do my options flows, I want to look for those that are not in the most active trading. And for the one that pops right here is Crocs. So what I'll do is I can now become a little bit more granular, and I'm just going to type in a contract specific symbol, and that will give me Crocs. And then I'm going to look at the Crocs trade. Now, again, I didn't have time to set this up and look under the analysis here, but in terms of Crocs, you know, what I see here is looks like a couple of different call spreads. For instance, this looks like some kind of a butterfly, 95, 100, 105, 110. And then this looks like a 145, 150 call spread. So that could be a bullish sentiment, could be a bullish trade. But again, they would have to do a little bit more analysis. The other thing I'm going to start thinking about is, you know, that volume to open interest, right? Am I seeing a potential opening of a trade? Now, over here on our screener, we do have this designation, this little star designation here. If I click on that a couple times, it will show me those that are buy to open, in other words, lifting offers, or show me ones that are sell to open, which is selling the bid. Again, I'm going to kind of look at these and look for those that have a large amount of volume, a large premium value, and again, more actionable trades are probably ones that are being opened versus ones that are being closed. And again, you know, looking at our symbols that we're seeing, I'm going to kind of look for, you know, some of those different outliers. Now, let's, for instance, here's a $1 million trade on a $70 stock. Now, ASO, I'm not familiar with it, but if I click on the plus sign, I can see it's Sports Academy Outdoor Inc. I don't know if this is a sporting goods store or what, but this is probably, you know, might be more of an actionable trade because it's a $1 million trade where 4,000 shares traded on a previous open interest of only 300. And so then that would take me to the next piece of information that I want to start looking at, which is called our code. Now, I'm trying to dissect the details of this trade, right? Is this a put or a call? Is this put or call in or out of the money? Again, the size, and now the code. Now, in this example, we're going to see that it says MLFT, which stands for multi-leg floor trade. Now, up here under the help section, if I scroll this down a little bit, we're going to start talking about these two filters. One is called flags, and flags, you can see, help us put trades into certain types of group conditions, and that there are blocks, sweep, regular, cross, floor, and non-regular trading hours. And that in each one of the flags, we have some code designations, multi-leg floor trades, single leg trades. You might see something like a cross trade. Again, a lot of different codes based on what type of trade it was and where that trade was executed. So under our flags and codes, flags help us determine where trades are executed. And so here's a couple of them that I think you might want to kind of look at. First of all, blocks. These are usually done by large institutional traders and are typically, again, this is a generality, excuse me, that they are typically hedges. Sweeps represent trades that are executed across multiple exchanges. I would consider sweeps more of an aggressive type of trading. In other words, somebody who really wants to get their contracts done. Crosses represent in-house trades that are executed by the broker. that matches up two different customers. Sometimes an institution versus maybe a large trader or two institutions that are trying to do the same thing from the opposite side. And then floor, I think maybe I could write on a better definition here, but floors represent trades that are, I wouldn't say initiated, but floor traders are part of that trade. In other words, either a buyer or the seller. I think the takeaway for floor is that floor traders take on positions using their own capital. In other words, that floor traders take on risk, and that might be a more actionable trade. Now, the code identifies the condition of trade, where, how, and what type a trade was executed. Now, the importance of the code for us in terms of when we start breaking these trades down is a single leg or a multi-leg execution. Now, just again, I can't give you an exact direction or a way to kind of define which ones are combinations of ones that you want to look for. But I will say that single leg trades are a lot easier to analyze than multi-leg trades. And again, if I'm looking for actionable opportunities, I might be more inclined to look for trades where I know somebody is actually putting their own money at risk. In other words, are floor trades. So we can also sort on at another level. And again, some of the levels that we can do is we can just basically do by the type of options. Is it a monthly option or is it a weekly option? I can also sort by a very specific date, option date. And again, if I'm doing this analysis and I'm starting to use expiration or days to expiration as one of my filters, I think you have to think about what you're trying to achieve here. So, if we're looking at days to expiration, that's with, let's say, inside of the first monthly, 30, 40 days out or less, then you're probably thinking about looking for a trade that is more of a short-term trade or an actionable momentum trade versus, let's say, a longer-term trade. Again, the style of trader will help generalize what we're trying to achieve. Again, you can think about zero TTEs or those weekly options that are on Monday and they expire on Wednesdays or Fridays. Your general sentiment or what you're looking for is probably just a very short-term momentum. Or what you might be looking at is, in these shorter-term ones, is you're trying to see if what the market is telling you maybe about a single event risk trade. In other words, for instance, today, Fed speak or a news story or an earnings, that would give you an idea of very short-term momentum, and again, that market sentiment. But what I believe is the true benefit of the flow screener is when we combine it with our other option screeners. In particular, the two that I'm thinking of are our unusual options activity screener and an unusual options volume. So let's look at some case studies. And let's see if I can help us define what I'm trying to explain here. So here is an unusual stock options activity email that I received as part of my Barchart Premier benefits that identifies the top 10 unusual options activities by volume and open interest. Again, one of the things that we're kind of looking at in our flow. Now, notice that I've identified two trades for UAL, which is United Airlines. Two different strikes with the same expiration, relatively the same amount of volume, And if you're an options trader, you could say that this is clearly a put spread. But what kind of put spread, right? Is this a credit or a debit put spread? So here's the options price page. And again, notice that you see the two strikes, the volume, and what the option price page, though, is cumulative. In other words, it doesn't zero in on the actual trades. This just shows you what the cumulative volume, the range, and where the bid and ask are. But notice that in this case, we do see 15,000 volume versus, just a handful, a few contracts of open interest. So this would be a definite example of somebody who is opening a trade, large volume compared to small volume. But here is the options flow, and this is what I'm saying. I've identified a trade basis unusual options, and now I'm going to go in the options flow and to help me to figure out what is all about this trade. Now, again, I've highlighted this, two legs, and notice that the code here says MLET, which stands for a multi-leg trade. Now, so it confirms that both of these legs are part of another leg or some type of a spread. Now, the trade sentiment here, let's look at this. First of all, the first one, the 41 strike, we're buying the ask of the higher put, $41. And it is in red, which means that it is a bearish sentiment. And notice the lower, right? We're selling the bid of the lower strike put. That's the $35 strike. Now notice that the sentiment here is bullish, right? Because we're selling a bid. But this is where the knowledge of options needs to come into play. If I'm buying a higher strike put and selling a lower strike put, well, that is what we call a debit spread, or a bearish trade, in this case, a bear put spread. So what I've done is I've used unusual options, and now I've used flow to figure out what is going on in this trade. What is this trader trying to achieve? Now, I want to go to a live chart so I can kind of show you two different examples about some actionable ideas on this trade. But before I move away from this, so those of you who are familiar with bear puts, let's think about what the break even is on this trade. So the break even on this trade, in other words, where does this trader start making money, right, is the upper strike minus the debit that they paid. So, they paid about $1.45. Looks like they collected about 25 cents. So they paid about $1.20. So a $41 strike minus $1.20 put our break even at $39.80, which means that United Airlines has to get below $39.80 for this trader to start making money. So here's United Airlines, and you can see here's this little red arrow. There's this little doji, and that is March 11th when this trade was occurred. Again, what I said to you is a lot of times actionable trades could be very short momentum type trades. And notice that the following day, United Airlines did fall. And not only did it fall, which I think is kind of interesting, that it fell all the way down to the $41 value. But since then, United Airlines has risen. So the trader who initiated this trade is now out of the money. But let's go back into, again, this is the forensics. Here I'm going to options pricing. And this was, I believe, the April monthly. And I need to expand my strike. And what we can see is, here's the 35 strike, here's the $41 strike, is that the open interest is still there. That means these traders are still in this trade. So how can I use this information? Well, let's go back to our chart. Well, the market is up, right? There's nothing that is going to happen until we get closer to expiration. in terms of our trader. Our trader maybe exit this trade if it got above $46, let's say, or they maybe just let it expire worthlessly. But if price of United Airlines fell down to that break even, 39.80, this now becomes an actionable level, which means that on that day, that's our two traders are going to have to make a decision. And that might be recalculating, rehedging, or what we might see is an acceleration of price through that level or a level of support. Now, I think it is really interesting that how this trade broke out is it lines up exactly with our most recent swing low. So here's how we're kind of looking at options flow in terms of dissecting a trade, and then also looking at, hey, this might be an actionable trade for me down the road, but I need price to get to one of these actionable levels. All right, here's another example. This is from February 8th. This is Amazon. And so let's look at this trade, the details of this trade, okay? So we have Amazon's trading at $100.70. This is a call, and the strike is 215 strike. Now let's think about that. Is that in the money or at the money? Well, that is out of the money. And how far out of it? Well, it's out of the money for like almost 25%. Now on this day, you know, I was looking at the delta on this one. I think the delta was less than 2, or maybe I think it was even 1. So a very, very small delta, very, very far out of the money. But notice, again, notice our volume versus our open interest. 89,000 volume versus 500 open interest. So this is definitely a trade that we can assume that is an opening of a trade. Now here's our options flow. And so the initial trade was a block trade, 24,000 trades. And you can see that the price was 81 cents. Now the code here says single leg CN. That stands for cross trade. So this was a broker matched up a buyer and a seller. So it's hard for us at this point to determine the sentiment of this trade. But look at the time of the trade, 9:45. Now, what I have here now is a cluster of trades of the same strike, the same expiration, and let's follow the timeline on this. So here's two 10:01s, right? We get a bullish sentiment. We're buying the offer, and notice that the price is above the initial trade. So what is happening here? Somebody is buying the offer and raising the price of this call. I would certainly consider that a bullish sentiment. But 10:01, here's 10:02, 92 cents. Here's 10:02, 93 cents. 10:06, 94 cents. 10:06, 10:14, 97 cents, right? So rising price on Amazon. Now we'll look at a live market of Amazon, but I will tell you that on this particular day, Amazon opened up lower. So again, somebody buying calls on a down day, that would normally calls would fall in value, not rise in value. So this certainly was a buy bullish sentiment. Now there is two caveats here. Notice that we do have two bearish sentiments of this trade. Now this is why it's important if you're looking at a cluster of trades, or if you single out one trade, it's important that you look and make sure that there aren't other trades that are similar to it. But in this case, think about what this represents. The trade happened on the bid. And so what we might be seeing here is two scenarios. One, that our buyer has set a limit of how high they were willing to pay, or in this case, I think our market maker, who's taking the other side of this trade, is saying, hey, at 95 cents, at 97 cents, I can lock in a lot of profit on this trade, and I'm willing to sell this strike, which might tell us that we have now seen the top or the range for this particular strike, as long as our buyer does not come in and force the issue. So again, this could give you, for my volatility traders, this might give you that timing that you need when our sentiment changes on an intra trade from bullish to bearish. So let's go to Amazon. And well, first let's do this. Let's go to my slide here. Again, this is what I was kind of saying. Here's that cluster of trades. Notice that, you know, these are all happened in a very short period of time, but a lot of different trades. These are times in sales, a lot of trades in microseconds of volumes. That's why it's important to look at a cluster of trades for a set period of time, maybe like 15 or 20 minutes, to see if there's any change in your trade. Now, what's kind of interesting, this is for my volatility traders, is, you know, this strike had like a very, very small delta, 1 or 2, right? So that's not really going to have, for delta neutral trading, that's not going to have a big impact on our market maker. But notice that here's 945. That first trade was around 950, 54. That the price of Amazon went up during all of that buying action in those calls. And what I want you to kind of look at is the peak here. Now I drew this line while I was drawing this line, the line changed. But you can see the peak was somewhere around where Amazon peaked out around 170 and 150. And then after that trade was over, what did kind of Amazon do? It kind of went sleepy, and went down. So for my volatility traders, I guarantee you probably saw a rise in volatility in some of these out of the money strikes. That might have been an opportunity for you to sell some of them. And, you know, if we look at options pricing today, and I think those were the, hang on a second, I forget which ones those were. Those were the May? Yes, I think they were May. Let me just double check on that. Yes, the May 17th, yep. And, you know, I'm going to go a little bit out on strikes. Oh, here we go. Here we go. With 215 call now, it's only worth 70 cents. So again, for your volatility or for your short-term traders, you know, that might have been, because what the market maker was telling you is that might have been a good time to sell some of those calls. But let's go back to our price chart. And this was February 8th. There's February 8th right there. That's little candle right here. And there's that 171. And this is what I was saying as the details of the trade, right? And think about this. Now, the next day, Amazon got above 171. So our market maker who had sold those options would have to start repositioning, positioning their delta exposure, and we got a little bit of a pop out of Amazon. But what I find very interesting is from this date on, how this 171 now this could be just coincidence, but how this 171.50 level has acted both as support and resistance, and now support 2 times. Again, our market maker, every time Amazon dips, might need to buy more shares to continue to stay delta neutral. All right. So let's see. Okay. Let me do this here. I'm a little bit ahead of schedule here, but I do want to talk about another way we can use the option screener, Gene. So I see a lot of questions are popping up, and I see that you've answered a lot of them as well. So thanks for doing that. So let me kind of take a moment here to kind of scan some of these questions.
Right. While John scans the questions, I do want to remind everybody that options flow is a Barchart Premier feature. So if you do not have a Premier account, you will not be able to really go through and analyze a lot of the things that John is showing you. But never fear, you can get a free 30-day trial for Barchart Premier. It's a great way to at least start looking at the data that we have available, see if it can help you in pinpointing the options trades that you're interested in making. So if you have any questions about Premier and about how options flow works, we have a great support team, support@barchart.com, that will be able to help you with your questions.
Okay, Ron was asking about in the United example, why that the volume on the times and on the option pricing is just one chunk of volume, where on the flow we're seeing, and so this would be the cumulative volume, Ron. So every time the trade trades, it will start collecting volumes. What I did is I just sliced out a few of the trades. So what you would have seen here would have been, so here's, 1200, 1200, 1200, 1200, 1200, 1200. So the volume, right? These are happening very, very quickly. So the volume is that cumulative, and is how the totals are going. So at the beginning of this trade, you wouldn't have seen a collective volume of 14,000. It's just the way how the data is collected. Again, there's a little bit of a delay sometimes with our data page. So what could happen is you could have a cluster of trades in a very short period of time, and by the time the data gets caught up, then you would see that cumulative trade. All right. All right. So Raj is asking, do we monitor open interest over days until we exit our position? You don't have to do that, Raj. But if you're following a trader and that trader starts exiting that position, that's probably a good sign that if you're going to ride their coattails, you probably want to exit the party when they do. Okay. Is this in real time? No, our page is data delayed, right? Gene, help me out on this. What is it? About 10 minutes data delayed?
It's 15 minutes delayed. Options data is 15 minutes delayed.
Thanks, Gene. Thanks. Okay. All right. So I think we got a lot of the questions. So let's do this now. Another way we can use the options flow is this concept of time of day. Oops. There we go. Time of day. And this is kind of a philosophy of trading, but this is definitely a philosophy of trading I believe in. Large actionable trades can be executed anytime throughout a day as market conditions create opportunities, as our equities or indexes move. But, excuse me again, typically trades opened, again, remember how we determined opened, in the first hour of the trading day represent better trading opportunities. And trades that are executed in the last hours, last 15 minutes, last 30 minutes of the day typically represent trades that are being closed. Now, this is a generality, and again, this is not an analysis that is set in stone. Traders can open and close positions throughout the day based on market opportunities. What I want you to understand is that knowing that these times represent when volumes and activities increase is essential. Okay, so keep that in mind. So let's go back to our options flow page. And so over here, you can sort by time. And what I like to do is, like after the first 30 minutes of the day, I like to come in and see if there are some large trades that happen right out of the box, right on the gun, right? And so I noticed today this. So contract specific, this is Occidental. Now, before I start this discussion, I have to give full disclosure. I do own Occidental in my portfolio, and if you're not familiar with Occidental, this is one of the stocks that Warren Buffett has been consistently purchasing, and that's mainly the reason why I'm in this trade. But what I wanted to do is going to, and now what might be happening here is the trade might be getting, don't see it here, but let me do this. I want to look at just calls. Well, I know what I'm doing. I'm getting monthlies and not weeklies. That's why. Let's apply this one. Yeah, there we go. Okay. So here we see is the 6250 strike. It's a call. Now let's think about the details of this trade as we move along. Right, current price of Occidental is $63. Somebody is trading a 6250 call. Now normally I would say anytime I see kind of a call trade, I'm always thinking like cover calls, hedging. But somebody's buying in the money call. Now, typically people buy in the money calls to take advantage of the leverage of options. In other words, not the capital outlay. But the expiration is into August, and you can see that this was a bullish sentiment trade, 1,000 shares. Now, we do see that the open interest on this one was 2,000. Now, when we break this trade down a little bit more, what we might discover is that this could be two scenarios going on here. But this is an auto trade, which means it's probably just a single leg trade. So here is, I went down and I filtered this down based on calls, strike, and expiration. And what we can see here is right out of the box this morning is initially that we had 1,000 shares trade at $44.70. And notice it is a bearish sentiment. Now this might be, well, first of all, Occidental opened lower this morning. So what this might be is that somebody came in and was willing to buy these options, take advantage of that leverage, but our original 2,000 lot position holder looked at this as an opportunity to exit that trade. Now, if I go to history of options, you can see that, back when that open interest was created, this option was trading around $3.70, maybe around $4. And so what that trader might have done was sold into that bid, which would be that initial bearish sentiment. But notice what is happening as the day went on. 931, 932, 933, 942. What happened to the price of this in the money call? Well, remember, Occidental is down on the day. Do in the money calls go up on down days? No, they go down on down days. So what we're seeing here is somebody who is accumulating this position. Again, why we need to do these forensics. But let's break this trade down again. So they're buying 470s, 465s, 515s, 525s, and it looks like they accumulated about 5,000 shares. And if you think about that, 5,000 shares times around $5, that's a $2.5 million trade on a $62 stock. I think we could say that that might be a significant trade. So what can I do with this information? All right, so there's a couple of things that we can do. First of all, let's look at this trade in terms of what our chart is showing us. So we know we have a 6250 strike. Our average cost was about $5 to our trader. So that means that their break even would be 67.50. Now, again, I think it's very interesting that if we put that value on our chart, what do we see? What we see is that that 67.50 break even value represents a 52-week high. So this trader is probably saying, hey, I'm going to buy these in the money, the options, not having to buy the outright stock. And they believe that the Occidental is going to get above 67.50 between now and August. Okay, so what do we do? Well, what can we do? Well, the first thing I would think about is if I wanted to follow on the coattails of this trader, what I might do is just go in here, and one of the easiest trades I would do is do cover calls, where I would buy the stock today. It's on a down day, why not? And I'm going to sell that 67.50 strike, and let's see if 67.50 strike. If we buy Occidental today at 63.80, that is going to give me a potential return by August of about 10% or an annualized return of 26%. Not a bad deal if Occidental gets to 67.50. All right, what I could do also is, wait and make sure that open interest is an accumulation, but I could also look at, let's say, some vertical spreads. And so again, a bull call spread based on our August expiration. How about we do a 62.50? That's the strike that they were buying. We're going to join that trader's coattails, and we'll sell the 67.50, right? A $5 differential. And how much is that going to cost me? What is my potential return? And again, if I'm right on this trade, I'm going to get a 100% return on my options trade. Maybe you're not a debit type trader. Maybe you don't like to put money out. Well, what could we do next? Well, we could do a bull put trade. Again, looking at the price of Occidental, right? How about we do a 60.55 put, right? We sell the 60 put and buy the 55 put, right? We're going to take in $1 worth of credit. We're going to have about $3.90 worth of risk. Now, in my world, my threshold, that's 1 to 4. It's probably not something that I would do. I'd probably want to get closer to 1 to 3. But again, that every trader is different. And if you believe in this trade, I don't think that is a bad result in considering of this type of credit trade. So again, the unusual options trade gave us some trading ideas. We just now have to break down the details of the trade and then see how those details trades fit in the different types of trading options strategies that we like, and what the tail of the tape is telling us. Okay. All right, Gene, let me see. I see you've answered a lot of questions, Gene. Great job. Just make sure there's not any new ones that I haven't gotten here. All right. So let's talk about our takeaways, right? Remember, the option flow page is an excellent tool for identifying large premium trades. However, each trade is not actionable, right? The keys are the size of the trade, the premium, right? How does it relate and how relevant it is to the value of your individual equity or your indexes. Clusters of trades, right? Those volumes, right? Make sure you wait a little bit patiently. Let's see if we can see our trader tip their hands. If they do a block trade, that's difficult for us. But if we see a block and then a cluster, that could be a better indication. Sentiment, right? We can use sentiment at the large picture level, or we can look at sentiment at that very granular, right, on an individual equity and an individual strike. What is our volume to our open interest, right? We want to look for those those opening trades, buy to open, sell to open. But remember that the only way that we can confirm an open trade is we need to wait for open interest the following day. What's my code, right? Is it a multi-leg trade or is it a single leg trade? Was it a cross trade or was it a floor trade? Again, I can't give you direction on that. I think from watching trades, finding the ones that you like, the ones that work, you'll probably discover there are a few types of codes that you might start leaning on. And I gave you a couple examples of those in today. And then, the time of day. I can't reiterate how important that is. I really do believe that those actionable trades are those open trades that are made in the first 30 to 30 minutes to an hour of the day. Now, it doesn't mean that there can't be actionable trades at the end of the day, but I just find that those ones are the ones that have better results from my experience. But learning how to investigate our trades is how the way we can find which ones are truly actionable. Now, I'll also add just a couple of things here is how we used our other screeners, our usual options, our unusual volume, and how to really kind of do that granular. Think about it like this, our again, our astronomer, right? We're using a telescope to look at, the universe, right? And now we're going to zero in, right? We're going to use that telescope, right? We have like the Hubble telescope. So we're really going to zero in on something. That's where the benefit of the options flow page is. Okay. So as Gene said, that, this is a premier feature and we do offer a opportunity to test drive some of our premier features for free for a 30-day process. And again, talk about a low risk trade. I think you would benefit from trying that out if you're not a member yet. Next week we are off in terms of webinars. But let's see if we have one. Do we have one coming up? Let's see. Oh, yes. And there it is. On April 3rd, which is 2 weeks from today, we're going to do stochastics. So, if you're interested in stochastics, come on in. We're going to check that one out and we'll break down this. I would say, one of the more popular momentum indicator tools. And you want to add anything, Gene, before we jump away?
Okay. Other than to email support@barchart.com if you have any unanswered questions. I know that there are a few of you that I haven't been able to really help, but maybe support will be able to help you.
Yeah, and again, I think a lot of the guys that are on our support team are former options traders, so they will definitely be able to help you out with some of these questions. And I apologize not getting to everybody as a question. It's just a matter of time. So, folks, thanks for joining us today. I hope you enjoyed today's session. If you're watching on YouTube, give us a thumbs up and a like. I appreciate that. Drop us a line. Tell us what you like. And if you have any ideas, be sure to send them to us. Until next time, be safe out there, manage your risk, and the good of all trading.